And quickly check in on the fixed income space. Jonathan Sheridan, Associate Director, Fixed Income Sales at FIIG Securities, joins us now. We've been, as always, keeping a close look on what's happening in equities. At the index level, pretty flat at the moment. What about the bond market?
Good afternoon, James. Yes, pretty flat overnight really as well. Mixed data out of the US with the private sector jobs slightly disappointing and a weak beige book result. That was, I guess, offset with the commitment of the Chinese government to go to a 7.5% GDP growth target. So the mixed data really not doing anything to the bond markets overnight. Investors positioning themselves for the big non-farm payrolls coming out tomorrow night. I guess the big thing locally is that we've had some really strong data out with the GDP figures, and that's seen bond yields rise by about 3 points today on the Aussie 10-year.
Were you surprised by the strength of the market? Well, everyone seems to be pretty much caught unaware, or I suppose unexpected of the strength of that data.
Yeah, I think so. I mean, the retail sales in particular, I guess, 1.2% versus expectations of 0.4 was, a tripling of that expected number. So consumption's the big issue, I guess, for the RBA, and that's what we really want to drive the economy. So when you see a really strong result like that, I think that was a big surprise, and markets have reacted, I guess, accordingly, at least in the bond markets, with yields rising.
Does it further push back, do you think, the chance of any kind of a rate cut?
I think certainly. I mean, we've seen the RBA move to a sort of neutral bias rather than being on their easing bias that they have been over the last 12 months, say. And it's definitely a signalling point for them to say, well, yes, our stimulus methods have been working, and in the parts of the economy that we want to see working as well, namely being consumption.
More broadly, and looking at the bond market, the fixed income space, what's top of the list in terms of the appetite for investors at the moment?
I think inflation is really the key point. We had another strong inflation print as part of that increased level of data that we've seen come out recently at 2.7%. So investors who already owned the inflation-linked bonds, for example, have had a strong result on the back of that number, and they're still looking to lock in real yields, that is yields over inflation, of about 3.5% at the moment for the next sort of 6 to 10 years. That seems to be about the number where we've got a lot of interest.
All right, fantastic, Jonathan. Thanks very much.
Great, thank you.